Having knowledge on the company business and its fundamental is essential to ensure that the stock that we are buying is a good healthy company. Throughout all companies traded in the exchange, there is companies that making money and going to the downfall. So before we invest in any company, you have to ensure that the company you are interested in is consistently profitable and is not possible filing for any bankruptcy. This is because so many traders, especially beginners, lure to the cheap share price that is seen to be really attractive without considering the fundamental of the company. Most successful traders always consider the fundamental analysis as an important element on having a positive portfolio in the market in the long run, not neglected the important implementation of highly successful techniques of technical analysis. There are a lot of criteria that we look upon in a good fundamental of a company. All fundamental of a company consists from having the impressive income statement to all intrinsic value of the company itself. For example, the staff, especially the high top ranking management. Has the company been appointed the right person to run the business? A company that possesses an extraordinary management and staff not only will record impressive growth but rise and shine through the tides and difficulties. When it comes to fundamental, that's mean you are seeking the real value of the company compared to its current share price. The first basic principle rule is you should invest within your circle of competence. This is the core principle of fundamental. Never trade in companies that you did not have any knowledge about the details. For example, the company financial standings, the sector performance, and even the management of the company. One easy way to understand fundamental and value investing is that you can use common business sense to analyze a good company that runs based on a good business. Economic mode is a good fundamental criteria that we look into a company that enable the company to survive and having a fast growth in the future. An economic mode is criteria that make a company a leader in its competition. There are 5 key of economic mode. In this preview, I will explain 2 of it. One of the economic mode is economies of scale. Some companies is big enough that it is able to price its production at a lower price with equally good quality compared to its competitor. Its costs become very low that people can buy bulk with supplier for huge distribution network. For example, companies like DHL and FedEx. There is also an economic mode called brand loyalty. For example, like sports, brand Nike and Adidas have a huge brand loyalty that they has loyal customer for any products launch. This allowing the business to continue generating huge profits in many few years. We want to ensure that with a good fundamental, you would invest profitably in the long run. Investing in fundamental is a long-term approach. It involves your circle of competence about a certain sector or company. You want to know the result in coming at least 1 year and above. Buying a company with only fundamental without technical approach might result in you buying a share price at the top. This result in reduce your profit potential. So in order to buy at a very low price, you need to apply successful technical analysis strategy in your trade. Buying a good fundamental will ensure that the stock won't crash in the future. Beside fundamental, there is technical analysis. Technical analysis roots down to the analysis of supply and demand of the share price in the market to determine where the price trend is headed. In other words, technical analysis attempts to understand the market sentiment behind the price trends rather than analyzing a security's fundamental attributes. If you understand the benefit of technical analysis, it can give you a new set of tools or skill that will enable you to be a better trader or investor over the long period of time. Technical analysis involves in chart reading of the share price. Technical analysis is needed because even the share price of a good company could possibly go down temporarily. Thus, technical analysis is the answer for the trader to identify when the best time to buy a share price. Technical analysis gives signal when the share price hit price bottom and start to move upward. Without technical chart analysis, you could possibly buy at the top price. Then, when the market go downward, you subsequently be lost in position. This happen even the company possess a good fundamental background. The series of price action movement in the chart enable a person to identify market trend, subsequently enable one to trade and invest profitably either in short, medium or long term. There are various technical indicators that help a trader and investor to make decisions in the market. Technical indicators look to analyze past price levels or simply the general price direction of a security by looking at past data. Examples of common technical indicators that being built in the system include relative strength index, money flow index, stochastic, MACD, and Bollinger Bands. Technical indicators, collectively called technicals, are distinguished by the fact that they do not analyze any part of the fundamental business, like earnings and revenue. Technical indicators are used most extensively by active traders in the market, and as they are designed primarily for analyzing short-term price movement. It can also be adjusted to see long-term price movement. In the advanced learning of chartists, which is the learning of chart reading that include in the advanced chartist package, we will learn the high probability of chart movement prediction. With a high probability strategy, technical analysis can be a stand-alone strategy. It has been used by professional and successful traders to gain money from the market in really short and medium time frame. But bear in mind that solely dependent on technical analysis in short-term period may not be reliable when the general market is downtrend. It lost its probability of success in terms of the accuracy of solely using technical analysis in a bad market. It is because they might make a fake breakout during the bad days and reverse downwards. In a good market, one could rely solely on technical analysis because of higher chance that the share price would rise in the future. That is why fundamental and technical analysis is important in order for us to gain profit in the market immediately.